Hello again. Thanks for joining me. This is the US Futures weekly chart analysis for the week ending 30th of September 2022. The first chart is the US dollar index futures as usual. You can see this week that price moved up initially during the week, but it's closed well off its highs on very high volume. This is traded volume, it's not contract changeover. This was high volume. Supply's been drawn out this week, almost no doubt about it. The fact that price didn't close a long way lower compared to the previous bar suggests there is some indecision. There was not harmony in the market. Some participants probably were still supporting this market. Others were selling into it. You ended up with a bar that attempted to go higher, eventually closed lower, down near its lows for the week on very high volume, but it didn't really close much lower in comparison to the previous bar's range. It'll be the response next week that is most important. If price continues lower, you've got the breakout line here at 110, and here's the lows of the range. Inside here is likely to be previous support. You've got the breakout line from the next line lower here, so a breakthrough this range would be significant for sure. If price broke through there and moved down to this level, in this range, it would be a significant breakdown. Next chart's the E-mini S&P 500 index futures. Here's the previous lows. Spread narrowed this week on an increase in volume, and volume was well above average. So there was buying in this bar. Price continued lower, so the momentum in the market was still dragging prices lower. There was buying support coming into this bar. That's why spreads narrowed. You can see that volumes increased. So if the US dollar continues to weaken next week, almost certainly this market will pop up to some extent and produce an up bar. Just how strong that up bar is may depend on how weak the US dollar proves to be next week, or if it's weak at all. So very important, the response next week, and very important, most likely, what happens in the US dollar index futures. Next chart is the US Treasury 10-year note futures. Price broke down from its highs quite a few weeks ago now, broke below this little shelf here that had formed previously. Last week saw price accelerate lower with an increased spread, but there was a little close off the weekly lows, and this week has seen support come in, mostly due to the weakness in the US dollar index, I expect. Volumes increased to above average, spread narrowed. Prices closed well off its weekly low, up closer to the highs of the bar than the lows of the bar. A lot of the losses for the week were recovered by week's end. If the US dollar index continues lower next week, I would expect some form of up bar in response next week. Copper price futures have been quite resilient, especially recently. This is where the market found it difficult to move higher. The US dollar index was moving higher through here, giving headwinds to this market, but price really held on sideways. And last week, when the US dollar index spiked higher, this market hardly moved lower at all. This was strong resilience, and this week, this market has moved higher on an increase in volume. I expect any supply that was being drawn out has been absorbed. And if the US dollar index continues lower next week, this market will push higher in response. This is gold price futures. Here's the two breakdown lines previously. This market was in the process of breaking down. Last week, when the US dollar spiked higher, this market hardly moved lower, similar to the copper price futures. This was resilience being shown in the market and some buying. This week, the market's likely moved lower, tested for supply, and then pushed up This was some form of buying support coming into the market, and it's closed as an up bar for the week. That's quite promising. The last two bars have seen buying support come in. Silver price futures, and they have a couple of breakdowns in the background. You can see the breakdown was rejected here, and buying support has come in here. And here's your response to that buying support, albeit some selling pressure was drawn out in the top of that response bar. Last week saw resilience similar to copper and gold, where the US dollar index spiked higher, but this market held on and hardly moved lower at all. And you've had a mini sort of shakeout, absorption bar, volume was higher. It's sort of like a test for supply that drew out increased supply, but still closed strongly for the week. And that's showing that the market did comfortably absorb the supply that was being drawn out in the market this week. It's a good response. Often you'll see a secondary test for supply that draws out lower volume in response. But if the market's really in a hurry, you may just see price push higher in response, especially if market trading conditions are favourable. So if the US dollar index continues lower next week, even if only initially, you may see this market perhaps briefly test for supply, very shallow, and then push higher in response. Like crude price futures, broke down a second time 2 weeks back, and this week has seen some buying support come in, although it's not particularly strong. This was the volume bar that we were interested in last week. That corresponds to this bar. I was expecting some support in this zone. When we looked at the chart last week, and we seem to have gotten that to some extent around about the $80 mark. Prices stabilised to some extent. It's closed in the middle, which is showing some indecision. It's not strong, but it's not weak. It's trying to hold on at that level. The stronger level remains below down here. Whether that's going to be required or not, we'll have to wait and see. There's weakness continuing in the US dollar index. You may find price stabilises around the $80 mark. If there's continued weakness, you'll see price come back and perhaps test around the $70 mark. If there's sustained weakness in the US dollar index, I would see prices moving up and perhaps challenging this level. But that's for the future. Aussie dollar currency futures. You can see spread narrowed this week on an increase in volume, and volume was above average. Here's the previous breakdown. Here's where the market attempted to hold on at 68. Previous support has been much stronger around the 65 cent level in the past. And it's been a bit of a weak response so far, although there was buying in this week's bar, or it appears so. Spread narrowed, volume increased to above average. You just didn't get the higher close. So perhaps next week, if the US dollar continues to be weak, you'll get a bar that looks like this, which then I'll mark next week and suggest that buying support came in, something like that. But it's perhaps not as strong as you might expect this week, but the spread narrowed, volume increased to above average. That suggests there was some buying support coming into the market, and perhaps that's the first half of a little reversal bar like this. Bitcoin futures have a couple of breakdowns in the background. I'm expecting there to be support between 20,000 and 16,000. And if that can't hold, price is going to move down to around the 10,000. There's support between 8 and 12,000, and so it's centered around the 10,000. Last week, buying support appeared to come in on an increase in volume. This week, the market's moved higher, but volume is very high. the highest it's been for a long, long time. I expect this was most likely absorption, but this has been a really unusual set of circumstances through here. There's been mixed signals all the way through. It appears to be strong, then appears weakness has come in, but there's no downside follow through. Strength comes back in, but no upside follow through. It's very unusual. It's going on for a long time. Perhaps it's a good idea to have a look inside those last couple of bars, because it did appear that buying support came in last week, and this week looks like it's absorption, which is bullish overall. We go to a daily chart and we'll look inside those last two bars. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So here was 2 weeks ago. Effectively, price was drifting lower here. You've got a shakeout sort of bar here, and there was an increase in volume, so supply was drawn out on that bar. And then the next bar saw price move lower, testing for supply, and volume dropped, so selling pressure reduced over that bar. Next bar is likely a buy the offer bar. Prices moved up, allowed to drift lower by week's end. Then you've had a shakeout on the next bar, and it's been a positive response to that shakeout. It's eventually closed higher for the week. Then you've had another test for supply, and volume was perhaps a bit higher than expected. You look at this test for supply, that's this bar. That's how much volume was drawn out, and the next time price pushed down in a similar fashion to a similar level, a bit more supply was drawn out. So there was selling still in the market. Anyway, price pushed up in response on higher volume. We'll call that an absorption bar at this point until proven different. A buy the offer bar in response, prices pushed up. Buy the offer allowed to drift lower by week's end. A little test for supply in the bottom of this bar, and a push up suggested that the market was bullish. Price was pushing up after dipping lower, and that drew out quite high volume as well. Next bar was looking like a test for supply. Volume was very high. This is likely an absorption bar, and then a no demand sort of up bar in response. It does look more positive than negative. I'm expecting market will continue sideways in this similar fashion until supply becomes low. While supply continues to be drawn out, the market's unlikely to attempt to push higher. It certainly looks stronger than weaker on the daily chart. We'll just have to wait for a response to confirm that. Go back to the weekly chart. You can see those two very narrow spreads this week, both on above average volumes. I expect this is stronger than weaker at the moment. If all this buying was dumped for any reason, this market's going to plummet lower with a really wide spread. If this market breaks out above the highs of the range, this buying will support the breakout and it will push higher with considerable force. Certainly worth watching, and certainly worth going with which side eventually gets the upper hand. Just quickly back to the US dollar index futures. There's no doubt that some considerable supply was drawn out this week. The fact that price didn't close below halfway on the previous up bar suggests there's some indecision. There was still some support in the market and there was a bit of a battle going on. Perhaps we should look at the inside of that bar. This is the daily chart. These are the 5 bars we're looking at. And you had an initial push higher on an increase in volume, which is a good, strong push higher. A test for supply that drew out reduced volume, but still about average. A little bit of supply was drawn out, but not too bad. Next bar saw price move higher in response and above the highs of the previous 2 bars, but supplies come in and it's pushed price lower. It's very high volume, really high volume, higher than everything on the chart here. And price is pushed below the initial up bar's low, but only fractionally. Next bar made an attempt to push higher, but eventually drifted lower and closed below that bar's low. So this is a confirmation of the weakness. But the last bar on Friday, yesterday, volume was low, price closed in the middle. There was some indecision in this bar and it wasn't confirmed for a breakdown. The response next week is going to be really important. If price continues lower and confirms the weakness, you're probably going to see 110 for sure, if not next week, in the future. But the next shelf is 108 through here. And if that was to be broken to the downside, you would really see some weakness emerge, because that would put everything here under pressure and it could be dumped, and that would be serious. And if all of this is dumped, you're going to get a big widespread down bar in response. Interesting times. Just back to the weekly chart before I close is the market as we see it. There's the ranges. This is going to be the important level in the near term. That's 108. So 1010 is a bit of a warning sign. 108 is going to be the really serious level to watch in the coming week or two. Okay, thanks for your time. Hopefully that was worthwhile watching. Thanks again. See ya.